Welcome back to Road to Fire. We're a family of three documenting our journey to fire, financial independence, retire early. So let's talk about our September net worth update. I'll provide an update sharing all our real numbers, current investments, and how we're tracking to our fire goal like always. So please hang with me. So September was a brutal month on all fronts. We had unexpected expenses, a health visit that was not planned. I had to do over 10 interviews for a new job, got the job, now planning to move, and of course the markets have tanked. Our net worth is heavily weighted on stock investments per our plan, so yes, I'm happy to see September go. But let's talk about how you calculate your net worth. It's really quite simple. You take your assets minus your liabilities. Think of your assets of what you own, while your liabilities are something you owe, which is exactly what we do. But we don't include all of our small assets. These assets have value, but are very minor to our overall fire journey. So let me explain. Essentially, assets include your home, your investments, your jewelry, your art pieces, your cash on hand, your car, and so forth. For us, we only focus on our large assets. Yes, we have cameras, laptops, a drone, designer items, some overpriced paintings, and so forth, but we don't include it when we're calculating our net worth. Honestly, we only focus on things worth over $5,000 just to simplify things. I like to keep things simple as once you establish what's in and what's out, I then keep it consistent month over month to make sure our data is sound. Honestly, tracking the value of the smaller items would be definitely subjective month over month for me, so I just kind of keep them out. Our ideal net worth or fire number is heavily weighted on investments. I'll add our fire number video here if you want to check it out, but it shows our ideal plan for the future. But because we're heavily weighted on stocks, what happens in the market impacts our net worth majorly, but this is by design. I also want to note that the majority of our investments are in index funds which mirror the top companies in America, so if you've been watching the markets in the last month, then you can guess how our net worth has been doing overall. But for us, we are always looking long term or longer out, and we know we have a longer road to go. Still pursuing fire, but it won't be in the next 5 to 7 years. Again, we plan to do step down retirements to transition into a more balanced lifestyle in the future or mini retirements, but that isn't anytime soon. Year to date, our outlook is very strong despite this softer month. Okay, let's get into the numbers. Keep in mind this is a snapshot of our assets and liabilities as of the last week in September. Our accounts are always fluid and adjusting based on the market, but this should be a good read for this month. So here are our assets which make up of two main sections, our large and fixed assets as well as our liquid assets. And this is how we categorize it to make things simple and easy. We own two cars. We own a Tesla and an Audi, and these are the current values as of September. It's valued at about $64,000. Mint automatically updates the values for us each month, so I don't have to do any of the research. We don't own a home, but have gotten a pre-approval letter and are in the midst of finding the right home as we move back into the Midwest. For our liquid assets, we have about $16,000 in cash as of this snapshot. We've been working on paying off debt, so our cash is a bit lower than usual. The cash reserves you see here is basically our emergency account. Our checkings change always, but our savings are relatively fixed. For retirement, we have about $160,000 in our 401k, IRA, and our Roths. We have about $27,000 in a brokerage account outside of our retirement accounts. Our overall liquid assets are about $204,000, and our total assets are about $268,000. Again, we don't add personal items into our net worth analysis as we find those items to not really move the needle. For October, our savings rate and income will be increasing, so I hope to get our cash reserves back up again. So here's our total liabilities outlook. It's pretty simple for this month. If you've not seen our debt-free journey update, then I'll link that video here. We finally paid off our Audi, so we only have one liability as of right now. And we don't have any credit card debt, student loans, or any other type of debt to date right now, so we really are just focusing on that Tesla debt. The current balance on our Tesla is just about $35,000 and represents all of our debt. I'm happy this page is so empty as it signifies progress for us overall on our debt-free journey. We will be shifting the payments we made into our Audi into our savings and investments starting in October, so stay tuned for that budget update. So here's our view for the total net worth as of September. Right now, our current assets are about $268,000. And our current liabilities are just under $36,000, making our overall net worth just over $233,000. Since tracking our net worth, this is probably our smallest or softest month to date, but it's expected as you can't expect every month to have a double-digit gain. One thing to note that paying off debt doesn't necessarily increase your net worth alone. You need to be simultaneously saving or investing to see net worth gains. For example, we invested nearly $4,000 into the market this month and still saw minimal gains due to the shifts and changes that are happening in the market currently. If we weren't investing anything, our total net worth would have been much less than it is right now based on how the market has performed. So we love the idea of doing both, paying off debt and investing at the same time to make sure we're growing our net worth overall. We just started tracking our net worth back in May, and I love looking at the trend graphs. In the last 2 months, we've seen double digit growth month over month, which is obviously not sustainable, but was great to see anyways. So versus last month, our net worth is up only 1.6%, driven heavily by increases in our checking due to additional income coming in. Our stacks have seen strong declines, limiting our overall growth. I'm not sure what the remainder of the year looks like, but we won't be changing our investment strategy. The DCA method works for us, and we'll continue to do that throughout our FIRE journey. I always like to put this chart in here. This is a net worth by age report that I found on NerdWallet. It gives you a clear view of where you are based on your age group. This helps ground you when you think about net worth by your age, which is something I'm always curious about. For this chart, it's best to look at the median versus the average, as the ages range are really far when you think about each individual section. For example, remember how much you made at 18 versus how much you expect to make at 35? So when you look at the less than 35 range, that's a huge life changer gap there. So just be cautious on how you view this. One thing that it's continuously telling for me when I look at these charts is that if FIRE is your goal, then you need to be a lot more aggressive than those in your age range when planning for retirement. So here's our FIRE tracker. We're tracking about 9.5% to our FIRE goal, or our overall number of about $2.45 million. Our goal is to have a $250,000 net worth by the end of the year, which I believe is pretty much attainable, as we'll be one, getting a house, increasing our income, and hopefully providing a little bit more additional passive income soon. Ideally, we'll get our stock investments around $200,000, which we're very close to hitting that number. Our year-end goal will get us to close to about 10% to our FIRE number. I love reviewing this chart the most, as it gives us clarity on how we need to adjust, change, or become a bit more aggressive to hit our FIRE number. Now, we don't expect strong growth every month. Luckily, we're in this for the long run. So the slow months will always be offset in the long run by the better months, and we aren't worried. We're not adjusting or changing our investment strategy, we're just staying the course. So if you made it this far, thank you for watching, but don't forget to comment, like, and subscribe. Until next time.